Thanks, Darius, and good morning. Good to be back. Top three things this morning in my notebook this morning would be number one, Japan, number two, food prices, and number three, once again, the bond market or the 10-year bond yield. So first on Japan, again, look at what Japan did overnight. It did a whole heck of a lot of nothing. Failed at resistance at down 10% for the year to date, and really has no support for the Nikkei down to 13,808. So that's a long way from 14,512, which is of course where the Nikkei closed. So if you're looking for short ideas today, again, if you're bearish on the dollar, that means you're probably bullish on the yen, and if you're bullish on the yen, you're bearish on Japanese equities. So we'll stay with that after my little vacay. Then the second thing would be food. And again, I did eat on my vacation. It's kind of nuts, I tell you, but this kind of stuff, and I have coffee, all these kinds of things, these vices, these anti-consensus vices. Coffee prices up 77% for the year to date, Darius. Soy, up soy. God forbid, you've made the shift. The evolutionary shift, and you put soy instead of this thick cream into your coffee. That's up 19 for the year to date. And if you don't care about these one-off call-outs, just look at the food index. It's up now after being up another 2.7% last week. Again, beating the Dow, beating the S&P 500. Again, on a week when S&P and the Dow were up on no volume. But this is now for the food index up 21.6% for the year to date. Now, there are no signs of inflation, of course, that notwithstanding. Finally, 10-year bond yield, of course, enjoys watching this clown show that is inflation not slowing growth, which continues to be consensus. I heard somebody this morning saying, oh, it's easy. He said it with an accent. It's easy to see the 10-year bond yield above 3%. Guess what? As long as you say it with an accent, you don't look at what's happening year to date. The 10-year bond yield, by the way, is down 30 basis points for the year to date because inflation slows growth. So on pullbacks in bonds, you want to you want to stay with that strategy. Buy anything that looks like a bond. You know what to do. It's like 2011, buying utilities fully loaded all over again. And those are your top three things.